We're starting off with a look at the Indian stock market, where UBS has upgraded its rating for Multi-Commodity Exchange of India, or MCX, to a buy rating with a target price of Rs 3,800. This upgrade comes after a recent 15% price correction from its May peak, which UBS notes leaves the stock trading at an attractive valuation of 40 times 12-month forward price to earning, a discount of more than 10% to its 3-year average. According to UBS, key regulatory developments serve as important medium-term growth catalysts for the exchange. For example, SEBI's recent consultation paper proposing foreign portfolio investment participation in physically settled non-agricultural commodity derivatives and index derivatives is expected to structurally deepen the commodity market. Additionally, continued volatility in key commodities driven by geopolitical issues in the Middle East is expected to support near-term volume trends. MCX posted strong performance in Q1 FY27, with revenue surging 88% year-on-year to 7 billion rupees. This top-line expansion was supported by a 47% year-over-year increase in futures average daily turnover to 10.5 trillion rupees and a 266% year-over-year surge in options notional turnover. In other news, we're also keeping an eye on Yubi, formerly known as Creed Avenue, which is reportedly planning to raise $200 to $300 million in funding at a valuation of around $5.5 billion. Meanwhile, the Securities and Exchange Board of India, or SEBI, is considering easing rules for foreign investors to participate in the Indian commodity derivatives market. We're also tracking the story of UBS downgrading Reliance Industries stock from buy to neutral due to concerns over refining margins and higher-than-expected capex plans. And finally, we have news that the Bombay Stock Exchange, or BSE, has signed a Memorandum of Understanding with the Telangana government to promote innovation and entrepreneurship in the state. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of business and finance, where two major stories have caught our attention. Firstly, Paytm's parent company, 197 Communications, has received a notice from the Income Tax Department, seeking to withdraw exemption granted to the company under Section 80. IAC of the IT Act. This development could potentially impact the company's financials. On the other hand, Lenskart Solutions has reported an impressive 182.3% year-on-year jump in net profit to 208 crore in the first quarter of FY27. The company's revenue from operations rose 33.6% year-on-year to Rs 2,214 crore during the quarter, with earnings before interest, taxes, depreciation, and amortization increasing 61.3% year-on-year to Rs 589 crore. Lenskart's international business is also gaining traction, with the company's Meller brand performing well. Analysts are optimistic about Lenskart's growth prospects, citing its strong network of stores, expanding product range, and increasing demand for eyewear. However, it's essential to consider the potential risks and challenges that the company may face in the future, such as intense competition and supply chain disruptions. As we analyze these stories, it's crucial to maintain a balanced perspective, considering both the opportunities and risks associated with each development. By doing so, we can gain a deeper understanding of the complex business landscape and make informed decisions. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the latest market developments. The U.S. Consumer Price Index has come in at 0.1% for July, which is in line with economist expectations. This has led to a reduction in the odds of a September rate hike from the Federal Reserve, with money markets now pricing in a 40% chance of an increase, down from 54% just a week ago. The dollar has been drifting on the news, still up 0.4% for the week against a basket of major currencies, but trading in a tight range. The euro is slightly stronger at $1.1537, while the pound is steady at $1.3490, despite data showing the UK economy unexpectedly grew in June. The Norwegian krone has weakened after the Norges Bank left interest rates on hold, citing softer inflation. Meanwhile, the Australian dollar has eased 0.1% to $0.70, but remains near its 10-week high. It's clear that investors are taking a wait-and-see approach, watching for further clues on inflation and monetary policy. As always, we advise our listeners to stay informed and adapt to changing market conditions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.